Choi, and this is Trading with Livevol. Sorry I'm a little late. I'm running way behind today with everything. So basically, I'm about 10 minutes behind. I did look at some of the trades that were happening today, but I didn't spend too much time because I didn't really have too much. So let's actually just get right down to it. So it looks like, you know, surprisingly, I'm actually having 2 days in a row where I'm up. So this hasn't happened in a while. So I'm gonna be pretty happy for today. So let me actually go over some of the stuff that I've been doing, because I was kind of busy. You see how, like, if you look at this position here, it's kind of racking up, right? For somebody who only has like now like 30,000 or 28,000 in equity. But there's so much to do. There's a lot of interesting trades out there. So basically, there's you know, if I wish my account was bigger, but I guess it's up to me to make it bigger. So that's kind of what I'm trying to do. So let's actually hop to it. So in Alcoa, as you guys know, I sold that strangle in earnings. That went out worthless last week. I did have 2 of these April 11 calls, which basically, you know, I sold out today. Let me actually do some historical so I actually can refer to some of these things. All right, so that's one. So as you guys know, I do follow these guys from Trader Minute. They're pretty good. TraderMinute.com. Make sure when you guys type it in that that Livevol sent you, and you get 1 month free. But basically, you know, they just buy naked options, which I'm not too good at, but they're very technically good, especially the head trader over there named Jeff. But so I just kind of, you know, follow them. So they got out of this trade this morning, but basically I was so busy I didn't even realize it. And then Amazon price went kind of down. So you know, I was looking at overall market, and my thinking is like, I'm just gonna let this ride until end of the day and then close it out. So that's Amazon. But let's actually go to some of the positions that I have. So one is Hertz. So as you guys know, I did the spread because people were you know, buying these calls. So essentially I basically trades. I bought this for 85 cents this morning. So it's expiration week, so I have a bunch that's expiring, and I don't want them to turn into stock. So I bought this for 85 cents just because I thought it was going to go up. And now I have this choice, right? So I paid $1.12 for that spread. So if I sell this now, right? So 85 cents, I paid $1.12 for the spread. What is that? 197. So I can sell this for maybe $2.10 and make 23 cents off this trade. Or I was thinking maybe I'll sell a call spread instead, right? So I'll turn that into a call. So 112 is what I paid for on that spread. So this one I paid just to kind of like, let me actually go back. Let me actually show you guys what I did. So it might actually be easier. So historical trades, Hertz. Okay, so you see how I paid $1.12 for this, and I just bought this back for 85 cents, so I lost 72 cents, right? So if I add 72 cents to this, if I if I sell this out for 197 or higher, I basically break even, right? So that's what my break even point is. And I was thinking, instead of doing that, I was hoping to sell this at 190, right? So basically, I would be putting on this 27, 28 call spread for like 7 cents or something, and then I can just let it ride. So, you know, I reinvest the 7 cents, and then possibly the spread that I started, I can turn it into $1. But I'm not sure still. The reason I did it was just because it looked, Hertz kind of looks bullish to me. Like, you see how it's like kind of like bouncing, and it's here. So it can like easily go back down, but I think it might go up. So so that's what I was thinking on that. So paid 85 to close this out. I might still close this out. I'm not 100% sure. Usually what I would do is I would have done this more than once, and I would have maybe closed out half a profit, and then half I might have turned into a call spread, right? Which would have been that I bought this call spread for even, more like, if I actually did it correctly. But right now, that's what it is, and I have that out. IWC, so the small cap. So if you guys are not aware, this guy basically closed this out. Let me see if I can actually increase that. Right, you see this 1700? The guy bought this, WSC went down. I'm going to click on the middle. See how he just closed it, right? He just closed it a couple of days ago. This is when he bought it, when the IWC was higher. And what happened was that he actually rolled down to these for 170, right? So he bought this for 170, and I'll actually go to it. So while he sold those, he basically rolled into these for 170. And now he has this, whatever, like 1,700 times, or however many times he did it. So what I did was I piggybacked it, but I didn't want to pay whole 170, so I sold these for 45, right? So let me actually go to all the trades. What's that, IWC? Yeah, so you see how it's like 175.45, so I paid 130 for that spread because I kind of thought the micro caps were the weakest ones, and if the market actually went down again, they might go down the largest amount in percentage terms. So it made sense that I like that bet, right? So and since he made money on this first bet, I felt more comfortable piggybacking him on the second bet. The only thing is I didn't want to pay $1.75 for it, so I sold this to offset it. Now all IWC has been doing in the past 5 days since then, or past 3 days, it's just gone straight up, right? So right now, if I bought this just naked and piggybacked them, I would have lost 70 cents, but it looks like I'm down about 30. I think I'm going to keep it. Maybe wait until IWC has like a down day. So you see how it's like here, and if it rolls over and goes down again, I might actually turn it into a put spread. But for now, for $130 and one lot, I'm okay with kind of just letting it go and kind of seeing what develops out of it. Let me go to IWM. So yesterday, as you guys know, this guy did this 1x2. Sorry for shaking the thing. He did this 1x2 for 40 cents, 2,000 by 4,000. Right? It was trading right around 112. I kind of liked it a lot just because, I'll tell you why. I'll actually type it in here. Again, it's because IWM has been weaker than the market. So like all these like momentum stocks and the smaller cap stocks were getting hit harder than the Dow, right? So at this point was when he made the bet. It made sense that if it didn't hit that yesterday and it sold off at the end of the day like it did on much of the reversal days, it could easily go down to 110. But if it didn't, it'll probably do exactly what happened today, which is keep on moving up. So I like that. trade that he put on because it was like a ratio spread, more like a, so let me pull it up. It was kind of like this spread right here. It was a ratio spread, and basically you're betting that IWM was going to finish here or here at the end of today. So 1.5 day trade. I liked it. I piggybacked it, and looks like most likely it's going to go out worthless. So I'm going to, I did it twice for 42 cents. And I did it once for 50 cents, I think. So here it is, 1 by 2, 90, 70, 70, 14, 14, 20. And basically it's going to go out worthless. So as you guys know, I've been trying to learn how to trade. And I'm not there yet by any means, but I'm trying to figure out a way to, let me actually show this. I'm trying to figure out to have this gamma position but not have to pay for this theta position, right? If I turn this into Greeks, it's not too bad because most of my data is in ZNGA, and all these other stuff is relatively balanced. But you see it's still more red than green, and I think I would like to increase the green a little to offset my data, right? Because I like taking shots, but the biggest problem with taking shots is you have, it costs you. It's like decay. And you could be wrong on direction. So all that added together, kind of, you need to figure out a way where if your shots don't work, that you actually break even, or maybe you even make money because you're positive data, right? So that's kind of what I did when I was trading. I haven't perfected it yet with Reg T, just because the margin requirements are kind of different, right? So, but I'm learning. And this was one of the things that I liked because it fit into my agenda, which is trying to harvest some premium while I'm trading. And I liked this trade because I was kind of like, I had like, realistic, I had like a straddle position. Like I wanted the IWM to move, but if it didn't, I still collected, right? So even if this thing stayed right at 112 till the rest of the day today, basically these would have expired worthless, and I would have still recouped the theta, the decay on it. So that's kind of what I'm thinking. That's why I did the IWM. Let me actually go to SPLK. So as you guys know, I did this spread, the April 65, May 65 call spread for 190. Because this guy did it, right? So I just piggybacked the guy's trade, not only because, let's see if I can show it to you guys here. SP. Yeah, so right here. So you see I sold one, bought one, net 185. So I did it for 185. This guy did it for 190 thousands of times. And my thinking was exactly this. So Splunk was like down around here, around 60, and I thought the downside was kind of capped, and if it had any kind of little bump, but if it didn't go too high right at this moment, basically that the calls that I sold, the April calls, which are expiring today, will go out worthless. And the one that I bought will actually appreciate, right? So, and that's exactly almost what happened, except today it actually went through the strike. So I bought this back today for 125. So I paid 125. I almost paid like $2 just because like the stock was like, ripping. So it was like right here, and I kind of waited and I bought it here. So right now it's still kind of like, it's kind of like ticking. So normally, and sometimes this gets me in trouble, but just bear with me here. So normally you just get out, right? You buy this, you sell that, you make like almost 100% on your money. You go like, you know what, Stefan, well done. Move on to the next trade, right? So if I did this like 100 times, right, and I put in 190, but I made, like, let's say $2 per contract. That's like $2,000. So you pocket the $2,000, you put it away, and you move on. But I only did it one time. And normally, what I could do if I'm still bullish on this Splunk, not because like I don't really know that much about fundamentally how this company makes its money, but just looking at the technicals and looking at the order flow, it looks like people are still buying some calls, right? So they sold these earlier this morning, but looks like later on in the day people are buying, right? So my thinking is I'm kind of bullish, but this is a momentum stock. So like you see how like it's here. Let me actually do weeklies. So if I was looking at the next week, I think maybe it has a chance to go to like hit this range, right? The 7 week moving average or something like above 70. So so basically, I wouldn't mind maybe turning this into the 65-70 call spread for even, right? So basically, if I sell this for 320, I would have actually made a nickel, right, on that trade. So I would have actually I'd be putting on the May 65-70 call spread for a nickel credit, which is pretty good. But in the end, like, I don't know. This is the kind of stuff that sometimes gets me in trouble because that original bet worked out, but I'm not really getting out of this, right? So I want to keep this position of being long, and sometimes that kind of doesn't work out so well. Like it in GM, I think I doubled up and it kind of like it went to zero. So it's kind of the same mentality. I made $1.90, but now I'm trying to make $5. So I'm actually going to sell this, and hopefully I can ride it up again, right? So I haven't made up my mind fully. You know, just so you guys know, a lot of the times my decisions aren't like, it's not definite. Like, it's fluid as the market changes, right? So everyone who thinks like, hey, like, look, if you're a professional, all of a sudden you never change your mind, but you kind of have this like, you know, philosophy and outlook, and then you're just gonna follow it till the end. It's actually not true. People change their mind all the time, and you just have to adjust to it. Hopefully you're adjusting correctly and you're not adjusting poorly, which can kind of put you on tilt, right? If you're like, if you're buying on top and selling on the bottom, that can drive you nuts. So, but in general, I'm not sure if I want to sell this. If this goes up to 320, I really would like to sell it. But if it goes up to 320, maybe I should just get out and get out for like you know, whatever, like 150% profit and call it a day or so, right? So I still don't know, and I'm gonna think about it till the end of the day. Apple. As you guys know, I've been bullish on Apple for a long time, to my detriment, and I actually got out of these call spread, right? My first trade that I did, the April 510, 530, because Apple got down to like 115, and I didn't want to risk it anymore. This was like 2 days to go. The funny thing is, like, since then, it's ripped straight up, right? Sometimes it's called like we call it like sacrificing to the option gods, because you have to pay to actually make some money. So in the end, the reason I sold it was because even if it went back up, I have these other full call spreads that I would make money on. So I didn't feel like risking that other one, which was just pure flip of a coin. But in general, I'm still holding to the fact that Apple is going to probably finish higher than 540 or higher by end of May expiration. But the thing is, now the earnings are in play, right? So the earnings are going to be pretty soon here, sometime next week. So I'm actually taking a risk of doing this, but I was thinking even if the earnings are kind of poor, it'll sell off and maybe it'll bounce back by the time these expire. We'll see what happens, but that's my call so far. And here's my other stock, ZNGA. So this thing, basically, this is my last of the position. I have a small call spread left, but basically this ends my idea on ZNGA. I still think ZNGA is going to go up, right? So I still think it's going back up to like $8, but it basically, you know, it wore me out, right? So, so in the end, like, yeah, I don't know if I want to like jump in and put on a new position, just because my account isn't that big. But you know, if I look at this thing, I'm still super bullish, right? So, like you see how it like bounced off here. Will depend on earnings. Maybe they have good earnings, it'll make it jump. But if they have poor earnings, they'll make it go down. The one thing that concerns me is that the whole fact that, you know, people are kind of rotating, and it's pretty much accepted that people are going to rotate from these, you know, high beta momentum stocks to more stable stocks, which I can't really blame people, because, you know, owning something like Alcoa or like IBM, Microsoft, GM, to me sounds a lot better than owning some high flyer, except for the fact that I like ZNGA, right? So there you go. Like, I am not into the high flyers, except I like ZNGA, so what can you do? The funny thing is I'm not actually that big a fan of their games. I think it could be better, and hopefully it will be better, but I guess I just kind of like the people who are running the company, and I think they're making the right moves. And to me, that's almost the most important fact when I pick stocks, is kind of making sure that the right people are actually driving the ship. Because those people pretty much can determine how well the company does going forward. But that's my personal belief. It's not so much like, yeah, it's almost like for you guys listening to it, this is almost like completely irrelevant, right? So maybe what you're asking is like, okay, Steph, great. I saw your position yesterday too. What can you give me going forward, right? So let me actually address that. For those of you guys who are waiting for some ideas, right? So I'm looking at this thing again. Let me actually, do I not have that up? Yeah, I don't think I have that up. Watch list trades. All right. So basically, as you guys know, this is my favorite scan and idea generation. All right. So this thing, I just set it, so it should be a little slower, but I set it to 1,000 contracts or more. So everything that's 1,000 or more, I want to see in the marketplace, and it'll just scroll. Like, it'll scroll all day, and basically you'll keep an eye on it, and then there'll be stock that just jumps out and talks to you, right? So to me, I was looking at it, and I saw these Lennar prints go up, right? So I see these calls being bought, and then yeah, just tons of calls being bought, and then probably these April 38s, you know, I'm not sure, but maybe they're just closing, right? Because the open interest, it seemed like it was the exact same amount, but who knows? And then they're expiring today, so it's almost irrelevant. The thing that is relevant is that somebody is buying just a crap load of these August 40 calls, right? Couple of things to consider. Okay, now that I know somebody's buying these calls, and I know Lennar Corporation, they basically build houses, right? Probably a lot of you guys have probably been in one of their houses, might not know that Lennar built them, but anyway, they build houses, right? They're in the housing sector, and basically the next thing I look at is the stats, right? So I look at the stats, and you see how this percentile here is 2%. What that means is this IV30 in a year's time is at the bottom 2%. So if you are going to take a shot at any moment with option, this is the cheapest time the option price has been pretty much in over a year, right? Which makes sense if you're just going to buy naked calls, right? So that alone the guy buys those calls. If the volatility was like at 60%, then yeah, it's a lot riskier, but like, hey, look, it's at a 52-week low pretty much, and then this guy's loading up on calls. I look at the chart, right? The next thing I look at is the technicals, right? So it's actually been selling off. So I would need to see a longer term, right? So I'm going to actually punch it in. So this is a weekly of Lennar. You see that the big run-up at the end of 2011 all the way till basically March or May of 2013, and basically it sold off, and it's just pretty much retested that, and now it's selling off again. So the 40s, if you look at it, it's right here. So it's not that much. It could actually be in this range and still pass the 40, right? So technically, that's what I'm thinking. Technically, this 40-cent kind is not that bad of a bet if you don't think like if you think the downside is limited. And my thinking is the downside is limited for now because in terms of housing, I don't think it's going to be that bad going forward, at least for the rest of this year, right? So, and then they had all that, you know, who knows, like they blame everything on the weather, but maybe that weather prevented them from building houses, and then maybe they'll sell some more in the summertime. But whatever, like fundamentally, I'm not that fluent in Lennar Corporation, so I'm talking strictly in terms of volatility, technical chart, and order flow, right? So that's how I'm basing my whole decision right now if I wanted to buy these calls, right? So I look at this chart and go, well, what are the chances it'll pop back to 40? It looks like it had earnings on 360, right? So basically June 60 is the next time it'll have earnings. So maybe, you know, these August calls are not a bad play, right? But they seem kind of pricey just to buy. So you can almost like start selling other calls against it, right? So maybe maybe you sell these May 40 calls, right? And hopefully Lennar doesn't go up to 40 by May, and then you can actually reduce the cost that you paid for this put, right, or call, right? So let me actually punch that up. I'm buying 1 August, selling 1 May, right? Looks like the fair value is about 140. This person paid, what did this person pay? They paid 186, 193. It's 199 now. So it's actually gotten a bounce. So if I look at it technically, if I look at this technically, let me actually go back. This actually looks like maybe it could be like a short-term bottom, and maybe it might go up to this Bollinger Band again, right? So normally I could maybe buy those calls naked. Might be the shot, might be the way to go. But I'm not sure. I almost feel like maybe even now that I think about it, maybe I should sell these calls, like do a strike that I don't think it's gonna reach, right? So you see how it's like 41. So maybe it goes up to 41, then it goes back down again, right? Maybe that's the way to go, but then you get less premium. So, you know, I'm going to stick with this one. I'm going to put 138 bid, which is smack dab in the middle, and I'll see if I get filled, right? Probably won't get filled, but I'm going to put it out there, and I'm going to think about it a little bit more because I just saw this trade before I got up here, right? Here's another one that I just saw. It's ABX, right? See how somebody bought 4,000 of these June 17 puts? Now, the reason I like that is because gold I'm gonna see how gold's been trading. It reached the 133, but who knows? Maybe it might be losing its steam. So in this chart, the daily chart, you can't tell any difference, right? But if you look at the weeklies, you see how like this is kind of like, yeah, I tried to make a new high, but it didn't reach it. So either it's gonna make a new high or maybe it might go down, right? My guess is, as you guys know, I like trends, right? So this monthly trend tells me that it hasn't really reversed. It's just kind of gotten a bounce, right? Now, if it made a new high, then I would have rethought it, but it didn't. So maybe it might go down, right? This is the gold miner index, which ABX will belong to, right? So not to go into too much complication, but basically what it comes down to is like it costs X number of dollars to mine 1 ounce of gold, right? And if that ounce of gold is less than what you can sell in the marketplace, well, these guys are losing. So it's like a very fine line for these guys, because as soon as the production cost becomes higher than the price of gold, they really get messed up, right? And that's why they do like a lot of like hedging. But that being said, I like this trade just because this guy is actually saying, hey, I think it's going to go down by June, right? Right, June 17 puts is what this guy is putting his money on, right? And he traded 4,000 of these for 48 cents, and it's a little higher. I like it. I like it. If you look at the vol, it's at the 52-week low vol. So he bought these puts basically where it's the cheapest it's been those whole time, right? So I like this spread. So I wanna buy some, right? But again, I hate paying for these things. So what can I sell, right? So he's did the 17 puts, and I think they did it just to give himself plenty of room to have it bounce up and down. But in the end, maybe you feel strongly that this is going to work, right? So I can maybe sell June puts, or I can start selling something else, right? So what else can I sell? Well, maybe I can start selling by these. If I just go weekly, and then, what is it, 15? 17. Yeah, maybe I can just start selling the weekly 17 puts or something to basically pay for it. And when I think that this is going to rip down below 17, I don't do it. The funny thing is this, they are confirmed to report earnings April 30th before market, so that could have some effect on it, right? So let me actually try this. I'm gonna do it just so I don't forget it, right? Complex. So you see my idea. My idea is I like this guy's thread of buying this put. What I don't like so much is the fact that that I have to pay for them. So if you can somehow work yourself to a free put, that might be the way to go. Right, so you see this, so I'm gonna sell this. So I'm gonna do this spread for like 46 cents. I'm gonna start doing it twice. And then later on in the day, I might just kind of work it to try to get it. But right now, that's what I got, right? I want to talk about Micron. So basically, that LEN and ABX trade, they're buying options at 52-week low. So like, what you guys have to understand using the software is did Stephen Choi actually decide, hey, this is a 52-week low in LEN and ABX, so I decide to buy calls and puts? No. There's some analyst somewhere up in the office who spent much more time than I did basically coming up with a strategy and a conclusion that they should buy August 40 calls in LEN, right? Lennar. So, and there was somebody else who did the ABX June 17 puts, probably spent equal amount of time, like check the volatility, check the price action, fundamental, whatever it is. They probably have more knowledge of those two stocks, and they pretty much spend more time, have more money, have more resources to figure that out. But what I was able to do is, because I know those two stocks, when it came up on the scan, so basically I waited until somebody actually placed the bet down, right? Then I analyzed the bet, right? So I'm actually like doing reverse analysis versus like actually going forward. I'm not actually sitting here and figuring out what stock should I buy or what stock should I sell. I'm actually waiting for somebody else to do some work, place a big bet down, and then I'm going to try to piggyback their bet if I agree with their analysis. So yeah, I could have searched maybe the whole database trying to figure out which one had 52-week lows, but somebody already did it for me, and they picked Lennar and ABX. So I'm going to piggyback it, but I want to do it better than they do it, right? So I know how they're going to make money, what their thinking behind it is, and just so you guys know, I am kind of guessing, right? I am guessing, but it's like an educated guess. It's not, I don't know exactly what they're doing. Who knows? They could have a hedge position on or whatever, right? But if I just analyze the trade by itself, I think it's a pretty good trade, and then I'm trying to do some kind of spread. So Lennar and ABX, those two definitely. And the reason I didn't put a trade on right now is because I literally looked at those at 10 a.m. Pacific Standard Time. So just before I got on is when I started looking at it. And now I actually put it on trade just so if I get filled, I know. But then later on, before the market closes, I'll make some decision. And if you know, maybe it's expiration, so it's not the best time, I'll think about maybe putting it on Monday or something, right? But that's it. So in Micron, as you guys know, usually I don't like to buy calls naked, but this guy was like loading up on this May 20 calls in Micron, right? So again, this guy spent his time doing the analysis, put on this huge bet in May 20s, right? Puts on this bet like 10,000 contracts. 10,000 contracts on April 9th, right? And he paid 287. So I'll actually go back to the chart. You can actually go to April 9th right here. This every time I know I founded the company, but every time I use this software, it just blows my mind how awesome it is. But see this May 20 calls. If you track it all, basically he's been loading up for 288, 287, and you can even go to time and sells to see every trade that happened on this line for that day and for the past 2 years. But anyway, for whatever reason, I think people are like readjusting their earnings to be higher. It got a pretty good jump today, right? So this guy, it's not my idea, but I was bullish on Micron. So it wasn't like I was just blindly piggybacking this guy, because like, let's face it, there is, and I just want to show you guys. Yeah, there's literally thousands of trades that go by that I can pick. How is it that I pick those trades? People ask me that, and usually it's not that I pick the trades, but it's almost like the trades pick me. So as these things go, like my eye actually just gravitates towards a stock that I know or that I find interesting, and I go, let me take a look at it, and that's how I found Micron, right? So I was kind of bullish. Then I did the same thing. It was trading relatively like 52-week low volatility. I was looking at the chart. It looks like it kind of was taking a bounce, right? So everything like lined up, technically lined up, order flow lined up, volatility lined up. So even though it was just buying naked calls, just because the volatility was so low, you see how the volatility is really low, 10 percentile. I think it was actually lower before, or maybe it's slightly higher. But whatever it was, it was low, and then I wanted to buy it, right? So all that basically makes me bullish. Now, sorry, I just stopped, but you see how like people are trading these? Okay. Sometimes I was thinking maybe I'll sell the 24s, but it's only 14 cents away. But anyway, so I have these calls now, right? So I piggyback this guy. Maybe I can wait until this guy decides to get out. But my thinking was when I put this on that maybe there's a good chance of getting to like the $25 range, and maybe that's when I'll pull it off, right? It wasn't looking too good because it actually went down further, but now this chart looks, to me, this chart looks super bullish, right? This actually looks like this kind of chart where it like made the bottom, and now it's about to make a new high again, right? So if that's the case, this is going above 26 bucks. So I'm gonna be like, normally I would have a lot bet on Micron, especially if I was right on this one and I found that this guy was right. I'll be loading up, and then I'll check all these other calls. So I look at the stats today. You see all these calls trading as well. If you take this out, most of it is pretty bullish. Selling puts, buying calls. Everything is indicating to me that this stock is going to go higher. So why, am I the one to call the top? No, I'm just going to ride it until it's over, right? So you're never going to really go out on top, or you'd have to be super lucky. Most likely, you're just going to ride it until you feel like the momentum's changed and it's done, right? So this that I paid $287 theoretically has a chance of going to like 26 bucks. If you look at this now, it's almost like stock, right? Because the premium is really little, right? Out of this. And the way you guys can see how much premium is left usually is if you have in the money options, just look at the puts or the calls. So if you have deep puts, look at the calls. If you have deep calls, look at the puts, and whatever the premium is left is what the premium is. So you're going to lose 11 cents over the course of the next month on Micron, right? That's pretty much half a cent a trading day is what you're going to expect to lose going forward. And that's kind of what you're risking to have a call that basically caps your losses at $20, right? So it's a pretty good trade. Normally I would actually be doubling up here, but since my account is so low, I can't do that. But yeah, that's what I think of Micron. I think it's a good bet, so I'm gonna just ride it. And I got this idea because this guy made the bet. So I've been trading and my account's been going down, and most of this thing was because of two stocks, Apple and ZNGA. Now usually what happens is I have about, I don't know, a dozen of those out there, right? Few will work, few won't work, but just the fact that I only had two and the two didn't work basically put me in jeopardy, because it's different if you have 50,000 versus like $1 million, right? So I had to kind of rethink the way I was trading, and I was thinking, well, maybe I go kind of back to basics, right? Which is, let's not try to be some genius and try to figure out all this yourself and originate all your ideas on your own, which I did with ZNGA and Apple, even though Apple had a little bit of like news and stuff like that supporting me. But it's essentially like something I came up with. Now, I will have ideas going forward, but I think maybe what I should do is kind of work more on like trying to use the software to take advantage of all the information that's out there. So don't think about trying to make a killing all at once until your accounts get bigger. Now, just so you guys know, like the puts in Yahoo or stuff that I'm doing like in Splunk. Like I did it one time and I could possibly make $190. But if you did that trade like, you know, a couple of hundred times, that's 4 or 5 grand per trade that you'd be making on a trade, and as long as your account was big enough, right? So if my account wasn't 28,000, but let's say it was 10 times the size, 280,000, I could do that like 50 times, right, or 100 times, and basically try to make 2 grand or a grand off of that one trade, which, you know, which is actually not that bad if you're gonna try to make a living off trading alone, right? So it's pretty exciting. Sorry I ran way over, but I had a lot to cover. Probably gonna go back, and I got a bunch of other stuff to do, but thanks for joining me. I hope your trading is going well. And tomorrow, just for you guys, tomorrow is not a trading day, so you must close all your positions today for this expiration, and then I'll talk to you guys on Monday about some more trading. So take care and have a great day.